Wall Street is getting something all wrong about the new coin launch. Let's bring in Mitch Steves. He's equity research analyst at RBC. Joins us from San Francisco. Steve, good to have you on.
Hey, thanks for having me.
What are we getting wrong?
Well, I think one of the interesting things is we have to start defining what a cryptocurrency is, right? So people believe that cryptocurrency can be centralized and it can be decentralized. I think that that is incorrect. So we have to separate the two items. One is a centralized cryptocurrency like a Libra, and then one is a decentralized cryptocurrency like a Bitcoin. So I'm going to put it in really layman's terms. There are really three key items. So with a centralized cryptocurrency, they can shut down your transaction. So let's say I wanted to send you $5 of Libra right now. Facebook could very easily just stop that transaction. If I wanted to send you $5 with a Bitcoin right now, there's literally nothing you could do about it. Another one is the onboarding. To go onto the Libra system, you have to actually be approved, right? So to get on the Bitcoin system, you don't have to do anything. So if you are in India, where they've already come out negative on Libra, you actually cannot get any Libra, right? But if you're in India and I want to send you money with Bitcoin, I can do that today. It doesn't really matter where I am, right? And then the last one is actually the consensus protocol. This will be a little more complicated on the tech front, but basically the consensus protocol for Libra uses what they call Byzantine fault tolerance. What that means is they chose the validators to confirm each transaction. Whereas in Bitcoin, if you want to download the code yourself and make sure everything is legitimate, you can do it yourself. So in the other one, you're trusting Facebook and you're trusting everybody else who they essentially charge $10 million to be part of the protocol with each transaction. So those are really the big three differences.
Let me ask you this question. How many Bitcoin dollars do you think the Libra announcement was worth? In other words, if they didn't announce it at all, where would Bitcoin be trading today?
I'm not sure if they're really related, to be honest, because the problem is the one thing that is related is I think it's making people read now, right? So before I would get a lot of questions that said, like, you can separate blockchain and cryptocurrency. I think that the average institutional investor who's actually been reading about this, now they actually understand you can't separate blockchain and cryptocurrency. Now, after the Libra announcement, people are realizing, wait a minute, you can't really have a centralized cryptocurrency and a decentralized cryptocurrency. So that is what I think is happening. I can't really put a dollar value to it, unfortunately, but I think that it's helping educate everybody on what the difference is between all of these different cryptocurrencies that are out there.
Sure, I get it. And I didn't mean maybe so literally, but you kind of get my point that if Facebook didn't announce this, I wonder if Bitcoin would have had the crazy weekend that it did. But BK, Brian Kelly has a question for you.
Hey, it's BK. So I have a question. You've in the past talked about this asset class being a $10 trillion asset class. Get me there. Is that all Bitcoin? Because if so, then Bitcoin's got a huge run. Or are we talking about multiple different assets that are going to emerge?
So to me, there's really two different asset classes within cryptocurrencies. There is a store value / medium of exchange, which would be a Bitcoin, Monero, Zcash, effectively Litecoin, et cetera. Then there would be the decentralized application side, which would be Ethereum, EOS, Cardano, and we've written about all these two different subsegments. So the first way to get there is you just look at gold, right? Gold's about 7-8 trillion, so that already gets you to one use case, getting you to 10, right, over 15 years. The second one is significantly more complicated. Essentially, what you're looking at is a decentralized internet. In this decentralized internet, essentially all the privacy goes to the user. So what that means is in the future, when you are using the internet, you will no longer be forced to see ads, you will be paid to see ads. You will no longer be forced to give out your financial information. You'll be allowed to choose who sees your financial information. And so then that environment, when that one scales out, I think that's going to be worth significantly more than just the store value side. But I think still people are trying to understand the store value side. And so that still has, like, as you guys already know, that's kind of the digital gold argument that people make.
Sure. Mitch, we appreciate it very much. Thanks.